At the top of this edition of India Tonight, we're putting the spotlight on the Lal Street, where indices have been cheering the action. The Nifty has closed above 17,800. It's the first time this has happened since the 21st of February this year. And now we've seen 8 straight sessions where the Nifty has moved up. The Sensex has managed to gain as well, more than 200 points at the end of trade. And even the broader markets have participated with gains in today's session. Sectorally, we've seen the pharma pact actually emerge as the top gainer. Stocks like Divi's and Laurus Labs have led today's gains in the pharma sector. But there was participation from auto stocks as well, IT stocks, even banks. They all closed in the green. PSU banks, on the other hand, have closed in the red. And now we are seeing them as the top sectoral loser at the end of today's session. But energy and FMCG stocks have declined as well in trade today. But as the Nifty crosses 17,000 over the last 2 months, we're trying to understand how these indices have fared actually since the 2nd of March. Let's find out. My colleague Vamakshi from our research team is joining us to break it down for us. Vamakshi.
Well, absolutely. Now, Nifty has closed over the 17,800 mark for the first time since February 21, 2023. And with this, the Nifty has advanced for the 8th consecutive session, gaining nearly 100 points in the trading session today. Now, for the current 8-day winning streak that the Nifty has shown, it has lasted from March 29th to April 11th. The Sensex has risen by around 4% during this time, while the Nifty has surged higher by around 5%. Now, the last longest streak of 8 working days was recorded back in 2022 from November 22 to December 21st, 2022. Now, Sensex rose by nearly 3.5% at that time, and the Nifty rose by nearly 3.6% at that time. Now, when we look at the last 8 days, let's look at some of the stocks that have gained the most since March 29. Tata Motors has gained nearly 16%, while Adani Enterprises and Divis Labs have gained 15% and 14% respectively. Now, that was it for Nifty, but what about Nifty Bank? Well, Nifty Bank has closed lower 3 days ago, and therefore Nifty Bank has seen only 2 days of gain. Now, since March 29, Nifty Bank has gained nearly 5%, and we had banks such as Bandhan Bank, Kotak Mahindra Bank as well as HDFC Bank contributing to the gains since March 29th.
All right, Vamakshi, thanks very much. That's the kind of action we've seen on the benchmark. But let's get further perspective on where these markets are headed, whether these up moves can be sustained or not. And for that, Aditya Shah is joining us. He's Chief Investment Officer at JST Investments, along with Mahantesh Sabarad, who, of course, is an independent market expert. Coming to you first, Aditya. Many say that 17,800 is a key level for the Nifty. They say that if we clear that level, then we would keep recovering lost ground and hit outperformance again. What do you think? Are we going to sustain the up move?
See, the US inflation number has been below the consensus estimates. So that is one good news for the market. And now the markets will be driven by the results season. We've seen TCS's results have come up and they are slightly weakish. So overall, now the results season will drive the markets forward. I, for one, am always bullish on the Indian economy. And we've seen the banking sector post robust credit growth. And now we need to look forward to the FMCG sector to understand how the rural demand is picking up. So overall, international events and the events in the US will obviously drive the markets. And we need to see over the next 2 to 3 months how the US Fed behaves. But overall, this correction was a nice opportunity to add good quality companies. And we've seen today in the pharma sector, companies like Divis that give 10% return. So in my view, any correction will be a buying opportunity over the next 3 to 6 months as the US Fed continues to fight inflation and the Indian economy continues to develop.
Mahantesh, do you agree that every dip is a buying opportunity right now? What's the sense that you're getting on valuations, which some experts are saying are pretty stretched, and your kind of call on the EPS picture as well? Do they inspire confidence for further upsides as of now, the kind of valuations that you're seeing and EPS projections?
So firstly, every dip is indeed a good opportunity to buy, especially in a market which has for the last 1 year has grown very tepidly. You've had a sub 3% kind of year-on-year growth for the headline indices. And therefore, it tells you that a lot of correction has already happened. This year has not been without challenges, especially on the EPS front that you also alluded to. So while we have the indices correcting, I would say relative to the earnings growth, and therefore the valuations having come down, but as I said, the challenges do remain. The challenges would be that henceforth we will be looking at a year which will have slower growth in terms of overall GDP growth, and that could potentially mean that uh, some portions of the corporate side will see earnings actually weaken. Having said that, the valuations at an index level of roughly about 17,800 that we have are still sub, I would say, 20x, and that's fairly, I would say, reasonable. I wouldn't say it is attractive, but fairly reasonable considering the fact that we had seen the past few years, particularly the first COVID year and the second COVID year, uh, showing valuations reaching excessive levels. So now we have reached a situation where the valuations have moderated. The challenges do exist. You could see potentially weakening of earnings in terms of growth, which is what in a way we saw with TCS. We have between Q3 to Q4, the year-on-year kind of growth number had decelerated on the top line. Potentially we would see something similar happening ahead. But the good news is the biggest pocket of a market, which is the banks, are likely to now see accelerated growth. Mind you, I had earlier opined that we might see the banks also facing headwinds, particularly with the rate hike cycle not yet ended, with the RBI signaling a pause, although be it a temporary pause.
Yes.
It does suggest that the earnings could be better for banks. They will lead the earnings growth trajectory ahead.
Fair enough. So, in fact, that's going to be a key trigger, isn't it, Aditya? We're talking about earnings and the outlook on earnings. We had TCS numbers that Mahantesh is talking about. A bit of a disappointment for the street. But how much are these Q4 numbers this time going to help the Nifty rise from this point? What's your sense?
In my opinion, banks will be the leader of the markets going forward this year. We've seen strong credit growth from all banks, and the system credit growth is at about 16%, which is very good. There will be a domestic slowdown as the world economy continues to slow down, and we've seen rural demand not really pick up. We've also seen export-oriented sectors face a demand crunch, and we've already seen that with TCS numbers. So in my opinion, we will see banks leading up the market and lenders doing exceptionally well, and all other parts of market will slowly and steadily start to recover from the COVID aftershocks and as well as the inflation aftershocks that most of the companies saw, which led to a large erosion in their margins. So overall, banks will lead the markets up, and all other parts of the market will continue to keep recovering slowly and steadily, but nothing major from other parts of the market in this regard.
The bank Nifty is going to move up, and smartly at that, like Aditya is saying, Mahantesh, there has, of course, been an indication that these bank counters would take a breather after the strong run-up last fiscal. Where do you think the action is going to come from if the banks are not going to be participating as much? If there is a bit of a breather, the up moves will come from where? Which are the indices that you see are moving up?
So, if banks do not perform as much as being anticipated, or let's put it into perspective, as much as they performed the last entire fiscal year, then we will have other sectors also participating. Chiefly, we will see a bit of recovery coming in from the commodity kind of place. You will have a good amount of demand recovery, particularly on the commodity side. Is the conversion margin, which is far more important relative to the overall price levels. And I reckon that the year ahead, we will see most of these commodity players witness a bit of an expansion in terms of their margins. That being the case, we should see the commodity stocks performing relatively better. Anything on the consumer side, be it discretionary or even the fast-moving consumer good companies, the demand growth is likely to be a bit suspect unless we have a really good monsoon and a really good crop forecast ahead. It's going to be a little tough for the FMCG companies and the consumer discretionary companies actually to perform better. There's also the outlier wherein we see that the government may, in an election year, this being the election year, could potentially ramp up certain amount of spends that could potentially spur demand. So I have my fingers crossed there. Although I expect some bit of push that can come in terms of the silver lining that I just outlined, the better monsoons and the government's spend push.
Yes. Those are important.
The
Yes, absolutely, Mahantesh. Those are important factors. But one big piece is crude oil prices, Aditya. And the way these prices have been moving up, do you expect that to have a huge bearing on the way inflation pans out? Because it's a concern here. It's a concern in the US. Central banks around the world are going to be watching that piece to be able to understand and factor in their monetary policy, keeping crude oil prices in mind. How is that going to impact the course of the Nifty now?
So definitely for an economy like India, crude oil basket is very, very important. The RBI has taken its crude oil assumptions at about $90 per barrel. And if the crude oil moves up, or as we've seen OPEC cartel taking some voluntary cuts in order to bump up the prices. So if the crude oil prices move up, there is a problem for the economy. However, the gas prices have corrected, so that is a positive sign. However, crude oil will continue to remain a problem if it reaches the $100 per barrel mark. However, with the US recession coming up, I don't see that the crude oil prices will go very much.
So yes, among the moving pieces is going to be action by the Fed, what the RBI does with its interest rate policy going ahead. A pause is what Shaktikanta Das has indicated, that it is a pause, it is not a stop. At this point in time, we're not seeking a stop as far as interest rate hikes are concerned, and that is going to determine the course of action that the Nifty takes as well. But we'll keep monitoring it, and we'll keep turning to experts like Mahantesh and Aditya. Thank you both for joining us on this edition of India Tonight. We got further perspective